Yes, that Warren Buffett, the billionaire who turned a few bucks into billions. His secret, a single book that's been called the Bible of Investing, The Intelligent Investor by Benjamin Graham. In the next few minutes, you'll discover the game-changing principles from this book that can transform how you handle money, whether you're a beginner or a seasoned investor. Stick around because your financial future might depend on it. Welcome to the ultimate guide to the intelligent investor, the book that shaped the world's greatest investors, written by Benjamin Graham in 1949. It's still a must-read in 2025, over 75 years later. Why? Because its timeless wisdom cuts through the noise of TikTok stock tips and Reddit trading frenzies. Whether you're saving for a house, planning retirement, or just curious about investing, this book has answers. In this video, we'll break down the core ideas of the intelligent investor in a way that's easy to understand, super practical, and maybe even a little fun. We'll cover who Benjamin Graham was and why he's a legend, the book's key principles like value investing and Mr. Market, how to apply these ideas to your life today, and a surprising fact about Warren Buffett that'll blow your mind. By the end, you'll walk away with actionable tips to invest smarter and avoid costly mistakes. So grab a coffee, hit that like button, and let's dive into the world of intelligent investing. Section 1. Who was Benjamin Graham? Meet the father of value investing. Imagine a guy who could predict stock market crashes, teach at Columbia University, and mentor one of the richest people on earth. That's Benjamin Graham. Born in 1894, Graham wasn't just a nerd with numbers, he was a revolutionary thinker who changed how we invest. Graham lived through the Great Depression, losing nearly everything in the 1929 stock market crash. Instead of giving up, he studied the markets like a detective, uncovering patterns that separated smart investors from reckless gamblers. His big idea? Value investing, buying stocks that are undervalued, essentially getting a $100 company for $50. Sounds like a deal, right? Graham wrote The Intelligent Investor to share this philosophy with everyday people, not just Wall Street elites. The book's first edition came out in 1949, and it's been updated several times with commentary by Jason Zweig in the 2003 edition, keeping it relevant for today's markets. Here's a wild fact. Graham mentored Warren Buffett at Columbia. Buffett calls The Intelligent Investor the best book on investing ever written. If a billionaire says that, maybe we should listen. Why it matters. Graham's ideas aren't about getting rich quick, they're about getting rich smart. His principles help you stay calm when the market goes crazy, whether it's a 2025 tech bubble or a crypto crash. Curious how? Keep watching. Section 2. The core principles of the intelligent investor. The ideas that changed investing forever. The intelligent investor is packed with wisdom, but three big ideas stand out. Value investing, Mr. Market, and the margin of safety. Let's unpack each one and see how they can make you a smarter investor. 2.1. Value investing. Buy low, win big. Ever bought something on sale and felt like you won? That's value investing in a nutshell. Graham taught that stocks are like products in a store. Sometimes they're overpriced. Think Tesla during a hype cycle. Other times they're dirt cheap, like a solid company no one's talking about. The trick? Find companies worth more than their stock price. Graham called this intrinsic value. How do you calculate it? Look at a company's earnings, assets, and growth potential. If the stock price is way below that value, it's a bargain. Example, imagine a company like Coca-Cola in a temporary slump because of bad PR. Its stock price drops, but its business is still rock solid. People aren't quitting soda overnight. A value investor swoops in, buys low, and waits for the price to rebound. Pro tip: you don't need a finance degree to do this. Use free tools like Yahoo Finance to check a company's price to earnings (PE) ratio. A low PE might signal a bargain. Want to know a secret about spotting deals? Stay tuned. 2.2 Market, your emotional business partner. Here's where Graham gets creative. He invented a character called Mr. Market, a moody guy who offers to buy or sell stocks every day. Some days Mr. Market is euphoric, offering crazy high prices. Think GameStop in 2021. Other days he's depressed, selling stocks for pennies. Graham's point: the stock market is emotional, but you don't have to be. Ignore Mr. Market's mood swings and focus on a company's true value. If you buy when he's pessimistic and sell or hold when he's optimistic, you'll come out ahead. Relatable moment. Ever panic sold a stock because everyone on X was screaming crash? That's Mr. Market messing with you. Next time, take a deep breath and ask, is this company still solid? Fun fact, Buffett says Mr. Market is like a drunk friend, entertaining but not trustworthy. Stick to your research and you'll outsmart the crowd. 2.3 Margin of Safety, your financial seatbelt. Graham's favorite rule, always have a margin of safety. This means buying stocks so undervalued that even if things go wrong, you're protected. It's like buying a house worth $200,000 for $100,000. If the market tanks, you're still okay. How do you apply this? Diversify your investments. Don't put all your money in one stock. Also, avoid overhyped trends. Meme coins. Focus on stable companies with strong track records. Quick story. In 2008, when the housing market crashed, investors who followed Graham's margin of safety rule survived the storm. Those chasing quick profits, not so much. Call to action. Pause the video and write down one stock you're curious about. Later, check its intrinsic value and see if it has a margin of safety. Share your pick in the comments, we'd love to hear it. Section 3. Applying Graham's wisdom in 2025. How to be an intelligent investor. Today, the world's changed since 1949. Hello, AI stocks and crypto, but Graham's principles are still gold. Here's how to use them in today's market, plus 3 practical tips to get started. 3.1 Navigating a crazy market in 2025. The stock market's a roller coaster. Tech giants like Nvidia dominate, while new industries like green energy are booming. Graham would say, don't chase trends. Instead, look for undervalued gems. For example, maybe a small renewable energy company with solid fundamentals is being overlooked. Surprising stat. According to a 2024 study, value investing strategies outperformed growth investing, betting on hot stocks over the long term. Graham was right. Patience pays. 3.2 3 tips to invest like Graham. Start with index funds. Graham loved diversification. If researching stocks feels overwhelming, buy an S&P 500 index fund. It's like owning a piece of America's top companies. Low risk, steady growth. Do your homework. Before buying a stock, check its financials. Use apps like Morningstar or Seeking Alpha to compare PE ratios and debt levels. Knowledge is power. Stay calm. When the market dips, and it will, remember Mr. Market's just having a bad day. Stick to your plan and don't sell in a panic. Humor, break. Investing like Graham is like dating. Don't fall for the flashy types who'll break your heart. Go for the reliable ones with substance. 3.3 Avoiding modern traps. Graham warned against speculation, and today's traps are everywhere. Meme stocks, crypto scams, or gurus on social media. Before investing, ask, would Graham approve? If it sounds too good to be true, it probably is. Real life example. In 2021, many investors lost big on overhyped SPACs, special purpose acquisition companies. Value investors who stuck to Graham's rules dodged the bullet. Call to action. If you're loving these tips, smash that subscribe button. We're dropping more finance hacks every week and you don't want to miss them. Section 4. Warren Buffett's obsession with Graham the Buffett connection. Here's that mind-blowing fact we promised. Warren Buffett didn't just read The Intelligent Investor, he lived it. At 19, Buffett stumbled across the book and called it a roadmap for his life. He studied under Graham, adopted his principles, and built a $100 billion fortune. Buffett's favorite chapter, Chapter 8, on Mr. Market. He says it taught him to ignore short-term noise and focus on long-term value. Today, Buffett's company, Berkshire Hathaway, owns pieces of Apple, Coca-Cola, and more, all bought with Graham's value investing mindset. Why it matters. If a kid from Nebraska can use The Intelligent Investor to become a billionaire, imagine what you can do with a little discipline. You don't need to be Buffett, just be consistent. Conclusion: your path to intelligent investing. So what have we learned? The Intelligent Investor isn't just a book, it's a mindset. Benjamin Graham taught us to buy value, ignore Mr. Market's tantrums, and always have a margin of safety. These principles aren't sexy, but they're effective, whether you're investing $100 or $100,000. Here's your takeaway: start small, stay patient, and think long term. Open a brokerage account, try an index fund, or research one stock using Graham's rules. Every step you take brings you closer to financial freedom. Subscribe for more money tips to level up your game. My closing thought: as Graham said, the investor's chief problem, and even his worst enemy, is likely to be himself. Be your own best ally. Invest intelligently, and your future self will thank you. See you in the next video. Thanks for watching.